When we talk about retirement planning, there's this giant elephant in the room. It's the biggest blind spot out there, and it can completely undo decades of your hard work and saving. We're talking about long-term care. And really, truly understanding this one thing is the key to protecting everything you've worked for. So let's break it down.
So let's just start with a number that should really get your attention. About 70%. That's 7 out of 10 Americans who are turning 65 today are going to need some kind of long-term care in their lifetime. That is not some small, far-off chance. That's a probability you really have to plan for.
Okay, so if the need is so common, why don't more people have a plan? Well, it almost always comes down to this one single, huge, and frankly dangerous misconception that so many people have about retirement. They just assume Medicare is going to foot the bill.
Let's be absolutely crystal clear about this. Medicare will not pay for the kind of long-term custodial care that most people end up needing. You know, the non-medical help with just getting through the day. This one little misunderstanding can completely derail a lifetime of savings. It's that serious.
So now that we've busted that dangerous myth, what exactly are we talking about when we say long-term care? Let's get really specific. The official definition really boils down to something called activities of daily living, or ADLs for short. And this isn't about some complicated surgery or high-tech medical procedure. No, this is about needing help with the absolute basics. Things like bathing, getting dressed, eating, just moving around your own home. It's the kind of support that lets someone live safely and with dignity, whether that's at home or in a facility.
And that kind of assistance, well, it comes with a price tag, and a very, very high one. Understanding the financial stakes here is what turns this from some abstract idea into a very real, very concrete threat to your retirement.
Just take a look at these average costs per month. A home health aide is about $5,500. Assisted living, right around the same. But a private room in a nursing home, that can easily top $10,000 per month. I mean, think about that. For a lot of people, that's more than their mortgage payment, happening every single month. And since the average person might need care for several years, a couple could easily be looking at a total bill of $400,000 or even more. For most families, that's not just a setback. That's the end of their entire nest egg. Your life savings could be completely wiped out. Okay, that's the problem. It's big, it's expensive, and it's super common. But now, let's shift gears and talk about the solutions. I want you to think of this next part as your long-term care toolkit. These are the main ways you can prepare for and pay for this kind of expense. Now, the two most common tools are insurance products, but they work in very different ways. Traditional long-term care insurance is kind of like a use it or lose it policy. You pay your premiums, and if you need care, it pays out. Simple. The catch? Those premiums can go up, and if you're lucky enough to never need care, well, that money is gone. Hybrid policies, on the other hand, are different. They combine life insurance with long-term care. So if you need care, you can actually tap into that death benefit while you're still alive. If you don't need it, your family gets the full benefit. So you're guaranteed a payout one way or another, but the upfront cost is usually higher. But hey, insurance isn't the only game in town. Your toolkit has other powerful options. You could self-fund from your own savings if you've built up a significant nest egg. There are specialized annuities, government benefits like Medicaid or VA programs for those who qualify. You can even use a reverse mortgage as a tool. The real key is just knowing which one of these fits your specific situation.
So let's try to match the tool to the person. Self-funding from savings, honestly, that's really only for the very wealthy, people who can take a $500,000 hit and not even blink. Traditional insurance is often a great fit for healthy adults in their 50s and 60s who just want pure protection. Hybrid policies, they're perfect for people who want to guarantee their family gets something back no matter what. And then there's Medicaid. It's the ultimate safety net, but you have to know this. To qualify, you typically have to spend down almost all of your assets first. It's really about finding the right fit for your financial life.
Now that you know about the tools, let's talk strategy. Specifically, let's talk about timing, because when you decide to act is every bit as important as how you plan to pay for care. When it comes to timing this, there is an absolute sweet spot. For most people who are looking at insurance, it's right there between the ages of 50 and 60. During this decade, you're usually healthy enough to get approved, and the premiums are still pretty affordable. But if you wait until you're past 65, not only do the premiums skyrocket, but if you develop a new health condition, you could be denied coverage altogether. The door could close. So we've got the tools, we've got the timing. Let's finish up by talking about what not to do. Seriously, just avoiding these common mistakes is half the battle. We've already covered a couple of these big ones, like waiting too long or falling for that Medicare myth. But the others here are just as critical. Ignoring inflation protection? That's a huge one. Without it, the benefit you buy today might only cover half the real cost of care 20 years from now. You have to plan for rising costs. And choosing the absolute cheapest policy is almost always a bad move. It might leave you with massive coverage gaps right when you need that protection the most. Because, in the end, this isn't just a financial transaction. It's about making sure that if you ever need that kind of help, you can get it on your own terms, without being a burden on your family and without draining every penny you worked your entire life to build. It's really about protecting your independence. So the final question really is for you. This whole thing boils down to one simple idea: control. Who do you want in the driver's seat for the last chapter of your life? Do you want it to be you with a plan already in place? Or do you want to leave it up to circumstances after it's already too late to choose?